Good evening, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, July the 30th, 2010. We've got a lot to cover today, so let's get right to it. This is the Dow Jones Industrial Average. The Dow Jones, the S&P, and the NASDAQ, they're all basically looking the same right about now, and you've had them close on Friday about flat. You had the Dow Jones down about one point, and the S&P and the NASDAQ were up a little bit, but just hair. So nothing really important there. And more importantly, they're way out of line. You should actually be shorting these guys hard, fast, and repeatedly. And let me show you. First thing to note right here is this pattern right here. Keep that in your little memory bank. And now let's overlay it on the long-term chart. This is a 6-month chart, each candlestick being 1 day. Now we're going to show it to you on a long-term chart. Okay, this is the long-term chart of the Dow Jones Industrial Average. That little time period we showed you is right here. Okay, this is the corresponding overlaid time period. If you're buying stock right now, it is probably the worst trade or investment of your career because this is actually this. Exact same setup. That's what's coming next, right there. Back at the short-term 6-month daily chart of the Dow Jones Industrial Average, you'll notice if you look at the Dow Jones, the S&P, or the NASDAQ, they all have this pattern on the slow stodge. Pulled up here, pull back down, touch support, bounce back up. Okay, now we're just playing around sideways right here, right? But nobody has traded below this support line. Now look at the FTSE. We told you last night and a couple times this week that the world markets are following the Europe financial crisis lower. That's what's really pulling the market down. Yes, we have some economic problems in different countries, but the big one, the real problem behind the major sell-off and what's going to lead us into another Great Depression is, again, that financial crisis in Europe. And the London Financial Times Index, or the FTSE, is a good chart to monitor to track the development of that situation. And like we said before, the Hang Seng, the U.S., and so forth and so on, they're all going to follow the FTSE lower like they did back here. Okay, now look at this trend pattern right here. Here, bounce, and now broke through it. Okay, get rid of those so you can see that again. All right, so you jumped up here, pull back down, hit that support, bounced up from it, just like we did on the Dow Jones, just like we have on the S&P and the NASDAQ. All right, well, in this case, they've already broken below it. When you break below it on the slow stodge, this represents price activity as well. So you're going to keep note. This low point here, this support line, corresponds with this one. All right. So you've broke below it here. All right. So the momentum to the downside is increasing. So this is telling you to look for a breakdown of this low point. That means price activity will do this. Okay. Will it stop here and turn around and go higher? Not going to happen. How do you know that? Simple. The technicals right here. We've been talking about those in the past. There's no hammer formation there. These are inverted hammers telling you that this support will not hold. In fact, it's going to break down and go lower. We also know, if you've been watching the news, Spain unemployment rate rose to 13-year high, just over 20%. That's substantial, okay? That is depression level unemployment. Very, very important there. Also, they're one of the problems in the pig countries, and that's, of course, going to weigh on the euro, okay, and anything that has to do with it. The Financial Times Index will be a good reflection of the problems over there. And again, look at the long-term chart for confirmation. If we do that right quick, okay, this is the London Financial Times Index of the FTSE, the 4-year weekly chart. You'll notice we've got this breakdown of this support line right here, as well as this support line right here. Then a bounce back up here, touching the middle Bollinger Band line, and this week forming an inverted hammer, which is a major sell signal telling you to short this guy lower. Okay, there's no bullish signal on this chart whatsoever, and this is pulling down the rest of the world markets. Pay attention, okay? It's very clearly defined right there. If you've not been to our free website at PerfectStockAlert.com, it's 100% free. All we ask in return, refer a friend. Also, we'd appreciate you subscribing to our YouTube channel if you feel like that. And that helps support us as well and keep us free. Okay, you can look at our disclaimer while I give you a couple of announcements. First off, this is the end of the month, so as we do every month, a lot of you guys already know this, but it costs me thousands of dollars every month to provide this service to you guys for free. And like I said before, I don't mind doing that as long as we're growing. And again, you guys have really shown your support in spades, and we have outgrown every single month. This month, the website actually paid for 25% of itself. That has a great leap from where we were 3 months ago. Okay, that's amazing. I want to thank you guys for that. I appreciate you guys sharing our videos online, referring your friends, sharing them on Facebook, Twitter, MySpace, etc. Thank you very much for that. I appreciate that. Go enjoy your weekend. God bless and take care.